Hey there! Welcome to our deep dive.
Into the world of decentralized finance.
You got it. You know, when you sent over all this source material on DeFi,
Yeah.
I was blown away by the sheer scale of it all.
Right. It's huge.
We're talking about a system that's processing
What is it, like
over $100 billion in transactions every single day,
every day?
all outside the traditional financial system.
Crazy, huh? It's a huge contrast to how things work now, isn't it?
It is.
Like while banks are closed for the weekend, DeFi just keeps humming along.
24/7.
Exactly. It really highlights this whole idea of creating a financial system that's always on,
Right.
globally accessible,
And doesn't rely on those traditional gatekeepers.
like the big banks.
Okay, so for anyone just joining us,
Yeah, let's break it down.
let's break down what we mean by DeFi.
DeFi 101.
One of the sources described it as imagining a world where you are your own bank.
Ooh, I like that.
What does that actually look like in practice?
So in traditional finance, we rely on these intermediaries.
Like bank
Yeah, like bank.
to hold our money,
Right, exactly.
process transactions, and provide financial services.
Like loans, mortgages, all that stuff.
DeFi basically aims to cut out those middlemen
Get rid of them.
using technology like blockchain
Yeah.
and smart contracts.
To create a more
Direct in
Yeah.
a peer-to-peer financial system.
peer-to-peer. That's the key here.
So instead of depositing your money in a bank,
You hold it yourself?
you would hold it yourself in a digital wallet?
Precisely. And these wallets,
Mm.
they're not just for storing cryptocurrency anymore.
Oh, really?
Yeah, they're becoming these platforms for a whole suite of financial services like lending, borrowing, trading, even insurance, all built on this decentralized foundation.
Wow, that's amazing.
It is. It's pretty cool.
You know, one source used a really interesting analogy to contrast DeFi with traditional banking.
Oh, tell me.
It compared traditional banks to a library with a strict librarian.
Okay, I can see that.
Limited hours, tons of paperwork.
You need permission for everything.
You need permission to even, like, look at a book.
Right.
But DeFi, on the other hand, is like having access to this vast digital library
That's always open.
that's always open with no gatekeepers in sight.
No librarian telling you what you can and can't read.
It really paints a picture of how accessible DeFi aims to be.
I love that analogy. It's a good one.
Thanks, I thought so too.
While traditional banking can be
Slow,
so slow,
expensive, and exclusionary.
for sure.
DeFi strives to be the opposite. Open, efficient, and accessible.
To anyone with an internet connection.
Pretty amazing.
It is.
Speaking of accessibility,
Yeah.
how exactly do these smart contracts work?
Yeah, how do they work?
To automate all these financial processes. I get the basic idea, but I'm curious about the mechanics of it all.
So smart contracts are essentially self-executing agreements
Okay.
written in code that live on a blockchain.
Okay.
Think of it like a vending machine.
Okay, I like that analogy.
You input your money, select your item, and the machine automatically dispenses your product.
No cashier needed.
Nope.
It all happens automatically.
Based on the pre-programmed rules of the smart contract.
Gotcha. And because these contracts live on a blockchain,
They're transparent, tamper-proof, and auditable by anyone.
that's cool.
Yeah, it removes the need for trust in a third party
Right.
and makes the system inherently more secure.
And resistant to manipulation.
Exactly.
But if anyone can see the code,
yeah.
wouldn't that make it easier for hackers to find vulnerabilities?
Oh, for sure.
It seems like a double-edged sword.
Yeah, that's a valid concern for sure.
Okay.
Security is like paramount in DeFi.
Right.
So while transparency is a benefit, robust code audits, bug bounties, ongoing security research, those are all essential to mitigate risks.
So it sounds like we need
We need layers of protection
layers of protection. So
Yeah.
we've got this open system.
running on these self-executing smart contracts.
Right.
Yeah,
But how do we actually interact with it?
good question.
Where does the be your own bank part come in?
That's where digital wallets come into play.
Okay.
Think of them as your gateway to the DeFi ecosystem. They
Okay.
allow you to store, manage, and transact with your digital assets.
Right. And unlike a traditional bank account where the bank controls your funds, with a DeFi wallet, you hold the keys.
You hold the keys, literally.
Literally.
It's like having your own personal vault for your digital assets.
Very cool.
And that's a powerful concept.
It is.
But it also means you bear the responsibility for its security.
Right. Because if you lose your keys,
It's gone.
it's gone.
Poof.
So let's say I have my digital wallet all set up.
Okay, you ready to go?
What can I actually do with it in this DeFi world? The sources mention these liquidity pools,
Oh, yeah, liquidity pools.
which sound like some kind of community-driven financial engine.
They're pretty cool, right?
They are.
So liquidity pools are essentially shared pools of cryptocurrencies
Hmm.
that are used to facilitate trading and other financial activities on decentralized exchanges.
Okay.
It's like a giant collaborative pot of money
A big pot of money.
that helps keep the DeFi ecosystem running smoothly.
I like that.
Yeah.
One source described it as a community swimming pool
Oh, that's a good one.
where everyone contributes water. That's the liquidity.
I like it.
And anyone who adds water earns fees from those using the pool.
It's true.
So it's like everyone's incentivized to keep the pool full and active.
Exactly. That's a good way to visualize it.
It is.
So by contributing your assets to a liquidity pool, you become a liquidity provider,
Okay.
and you earn a share of the fees generated by trades that occur within that pool.
So it's a way to earn passive income on your crypto holdings.
Exactly. Just let it sit there and earn money.
And how do these returns compare to, say, a traditional savings account?
Oh, it's not even close.
Really?
Yeah, the potential returns in DeFi can be significantly higher than traditional savings accounts.
Wow.
Like way higher.
Like, what are we talking? Like an order of magnitude higher?
Yeah, pretty much.
Wow.
While a traditional savings account might yield like a fraction of a percent.
Right, like 0.0 something.
Yeah, exactly.
Yeah.
Some liquidity pools offer annual percentage yields, APYs,
Okay.
in the range of 5–20%,
5 to 20%.
sometimes even higher, depending on the platform and the specific assets involved.
Okay, so we're not talking about like
Chump change.
chump change. We're talking about real returns.
We're talking real returns.
Oh, okay.
Yeah, it's no wonder people are getting excited about the earning potential in DeFi,
I can see why.
but higher returns.
Often come with higher risks.
Absolutely.
You don't get those kinds of returns without some level of volatility.
It's like trying to predict which way the wind will blow, you know?
Yeah, exactly.
And then there's this concept of impermanent loss,
Okay.
which is a risk specific to liquidity providers.
Okay.
It occurs when the value of your assets changes relative to each other while they're locked in a liquidity pool.
Okay, I think we need to unpack that a little bit.
Yeah, we'll definitely unpack that.
So we've got our wallets.
We're dipping our toes into liquidity pools.
But what about those everyday financial activities like lending and borrowing? How does DeFi change the game there?
So DeFi lending and borrowing platforms operate in a completely peer-to-peer manner
Okay.
without the need for traditional intermediaries like banks.
Banks.
Nope.
Okay.
It's a much more streamlined and efficient process.
One source shared a really compelling story
Oh, yeah.
about a small business owner in Nigeria
Okay.
who needed a loan to expand their business. They said that through DeFi, they were able to secure the funds they needed in just minutes,
Wow.
completely bypassing the lengthy and often restrictive processes of traditional banks.
That's amazing.
It is.
That's a great example of how DeFi can empower individuals and businesses, especially those who are underserved by traditional financial systems.
Right.
The speed, efficiency, and accessibility of DeFi lending can be game changers for so many people.
So we're starting to see how all these pieces fit together. Open access, smart contracts, digital wallets, liquidity pools, peer-to-peer lending.
It's all connected.
It's a lot to take in. What are some other ways people are using DeFi to manage and grow their money?
Well, there's this concept called yield farming,
Yield farming.
which has become incredibly popular in the DeFi space.
Okay.
It's all about maximizing returns by strategically moving your assets between different protocols and taking advantage of various earning opportunities.
Yield farming. That sounds...
A little intimidating.
Yeah, a little intimidating, but also intriguing.
Haha, it's both.
Can you break that down a bit more?
So imagine you're a farmer,
Okay.
but instead of crops,
Mm-hmm.
you're cultivating yield from your crypto holdings.
Gotcha.
You're constantly looking for the most fertile ground to plant your assets. The protocol's offering the best returns at any given moment, and you're actively managing your portfolio to maximize those yields.
So it's not a passive investment strategy?
Like simply holding your crypto in a wallet.
Right.
It's about actively participating in the DeFi ecosystem to generate the highest returns.
Okay, that makes sense.
Yield farming can be quite complex,
Yeah.
involving a variety of strategies
Right.
and a good understanding of the risks involved.
Right.
But for those willing to put in the time and effort to learn,
The potential rewards can be substantial.
substantial is an understatement sometimes.
This is all incredibly fascinating.
It is.
It feels like we're just scratching the surface of what's possible in DeFi.
Oh, we are.
Oh.
Just the tip of the iceberg.
But before we get ahead of ourselves,
Yeah.
I think it's important to take a step back
Take a breath.
and talk about the risks involved
Because with all this innovation,
and potential for big returns.
there have to be some downsides, right?
Right.
You're absolutely right.
There's no such thing as a free lunch.
DeFi, Like any emerging technology, comes with its own set of risks and challenges.
We need to talk about those
Oh, absolutely.
to ensure that anyone considering participating in this space.
Is doing so with a clear understanding of both the potential rewards and the potential pitfalls.
Let's take a deeper dive into that.
Let's do it. As exciting as the potential of DeFi is, it's crucial to acknowledge that this space is still relatively new and comes with its own inherent risks. Understanding these risks is essential for anyone considering participating in this evolving financial landscape.
You know, one of the sources I was looking at highlighted this idea that DeFi in many ways shifts the burden of responsibility onto the individual. It's empowering in the sense that you're in control of your assets, but it also means you need to be extra vigilant about security and risk management.
That's a really important point.
Yeah.
Unlike traditional finance, where institutions like banks bear much of the responsibility for security and regulatory compliance, and DeFi individuals are largely responsible for safeguarding their own assets and navigating the complexities of the ecosystem.
So let's break down those risks a bit further. The source I was just mentioning categorized the risks into two main buckets: technical risks and financial risks. What are some examples of technical risks we should be aware of?
On the technical side, one of the biggest concerns is the potential for vulnerabilities in smart contracts. Remember, these contracts are pieces of code, and code can have bugs. If there's a flaw in a smart contract, it could be exploited by hackers, potentially leading to loss of funds.
That makes sense. And it's not just about malicious actors, right? I was reading about how even unintentional errors in the code can have significant consequences. It's a lot of pressure to get those smart contracts right.
Absolutely. That's why thorough code audits by reputable security firms are crucial in the DeFi space. These audits help identify and mitigate potential vulnerabilities before a contract is deployed. But even with audits, there's always the possibility that something could be overlooked.
So it sounds like there's no such thing as a foolproof smart contract. And beyond the code itself, are there other technical risks we need to be mindful of?
Certainly, network congestion is another factor to consider. Most DeFi applications are built on blockchain networks like Ethereum, and these networks can become congested during periods of high traffic. This can lead to slower transaction times and increased fees.
It's like trying to drive across town during rush hour. Things just slow to a crawl and it costs you more in gas.
That's a good analogy. And in DeFi, those slow transaction times could mean missed opportunities or even losses if the market moves against you while you're waiting for a transaction to confirm.
Okay, so we've got smart contract vulnerabilities and network congestion on the technical side. What about financial risks? Those seem even more daunting to me.
Well, one of the most inherent financial risks in DeFi is market volatility. Cryptocurrency prices can fluctuate wildly, and this can impact the value of your holdings, especially if you're participating in activities like yield farming or lending.
Right. So even if the underlying technology is sound, the market itself can introduce a whole other layer of risk. It's like trying to predict which way the wind will blow.
Exactly. And then there's the concept of impermanent loss, which is a risk specific to liquidity providers. It occurs when the value of your assets changes relative to each other while they're locked in a liquidity pool.
Impermanent loss. That's a new one for me. Can you unpack that a bit more?
Essentially, when you provide liquidity to a pool, you're committing to maintain a certain ratio of assets. But if the price of one asset in the pair goes up significantly relative to the other, you might end up with less of the appreciated asset than if you had simply held it outside the pool.
So you could miss out on some of those gains because your assets were locked in the pool? That sounds, well, impermanent, but not exactly ideal.
Right? It's called impermanent because if the prices revert back to their original ratio, you haven't actually lost anything. But if the divergence in price persists, that loss becomes permanent.
Okay, so we've got market volatility and impermanent loss to consider. Are there any other financial risks lurking out there in the DeFi jungle?
Well, there's always the risk associated with specific protocols or platforms. Not all DeFi projects are created equal. Some may have weak security measures, poor governance practices, or even be outright scams.
Right. And it can be hard to distinguish the good from the bad, especially for newcomers. It's like the Wild West out there. Are there any resources or strategies people can use to vet these projects and make more informed decisions?
Absolutely. Doing your due diligence is crucial before investing in any DeFi project. Look for projects with transparent teams, clear documentation, and well-defined roadmaps. Check if they've been audited by reputable security firms. And be wary of projects promising unrealistically high returns. If it sounds too good to be true, probably is.
So it's all about research, critical thinking, and a healthy dose of skepticism. And speaking of skepticism, I have to admit the whole concept of being your own bank can feel a little overwhelming. It's a lot of responsibility to suddenly be in charge of your own financial security in this complex and sometimes risky digital world.
I understand where you're coming from. It's a shift in mindset for sure. But there are steps you can take to mitigate those risks and protect your assets in the DeFi space.
Okay, tell me more. So we've talked about the risks, but what can our listeners actually do to protect themselves in this exciting but still somewhat wild DeFi landscape?
One of the most fundamental steps is choosing a secure digital wallet. It's the foundation of your DeFi journey, so you want to make sure it's reliable and offers robust security features.
Right, because that wallet is essentially holding the keys to your digital kingdom. It's like choosing a good lock for your front door.
Exactly. There are many types of wallets available, each with its own pros and cons. Hardware wallets, which store your private keys offline on a physical device, are generally considered the most secure option.
So it's like having your crypto locked away in a safe rather than just sitting on your computer desktop. Makes sense. But what about those times when you need to access your funds quickly to make a transaction? Dragging out a hardware wallet every time seems a bit cumbersome.
Of course. For everyday transactions and interactions with DeFi protocols, software wallets are more practical. Just be sure to choose a reputable provider with a strong track record of security.
And I imagine those good security practices we've all learned for online banking apply here as well, right? Strong passwords, two-factor authentication, being wary of phishing scams.
Absolutely, those are all essential precautions. And remember, never share your private keys with anyone. Your private keys are like the master password to your digital vault. If someone else gets hold of them, they have complete control over your assets.
Okay, so secure wallet, strong passwords, and guarding those private keys like they're the crown jewels.
Yeah.
What else can our listener do to navigate this DeFi space safely and responsibly?
Diversification is another important principle. Just as in traditional investing, it's wise to spread your risk by investing in a variety of assets and protocols rather than putting all your eggs in one basket.
So don't bet the farm on one hot new DeFi project, no matter how promising it seems.
Exactly. And it's important to remember that past performance is not indicative of future results. The DeFi landscape is constantly changing, so what worked yesterday might not work tomorrow.
It's a dynamic space, that's for sure. And with all this talk about risk management, it's easy to get caught up in the potential downsides. But let's not lose sight of the incredibly exciting possibilities that DeFi offers. I mean, we're talking about potentially revolutionizing the way finance works.
You're absolutely right. DeFi has the potential to create a more inclusive, transparent, and efficient financial system that empowers individuals and communities around the world.
One of the most compelling aspects for me is this idea of financial inclusion. The source material highlighted that there are billions of people globally who are unbanked without access to basic financial services. DeFi could change that.
Absolutely. DeFi has the potential to bridge that gap by providing access to financial services to anyone with an internet connection, regardless of their location, credit history, or socioeconomic status.
It's like leveling the playing field, giving everyone a chance to participate in the global economy on a more equal footing.
Precisely. And beyond financial inclusion, DeFi is fostering innovation in ways we're only just beginning to understand. We're seeing the emergence of entirely new financial products and services, like flash loans, decentralized insurance, and prediction markets that were simply not possible before.
It's mind-boggling to think about the possibilities. But with all this innovation comes the question of regulation. How are governments and regulatory bodies around the world grappling with this rapidly evolving DeFi landscape?
That's a crucial question, and one that's still being debated. The decentralized nature of DeFi makes it challenging to regulate in the traditional sense. Many argue that overregulation could stifle innovation and hinder the potential benefits of DeFi.
It's a delicate balance, isn't it? Finding ways to protect consumers and ensure the stability of the financial system while also allowing this new technology to flourish.
Exactly. It's an ongoing conversation and one that will likely evolve as DeFi continues to mature and gain mainstream adoption.
So as we wrap up this deep dive, I'm curious, what's the one thing you'd like our listener to walk away pondering? What's the big so what of all this?
I think the most important takeaway is that DeFi is not just a technological innovation. It's a cultural and societal shift. It's about rethinking our relationship with money finance and the power structures that govern them.
It's about asking those fundamental questions, right? Who controls our financial systems? Who benefits from them? And how can we create a more just and equitable financial future for everyone?
Exactly. DeFi is prompting us to reimagine what's possible and to explore new models for a more decentralized and inclusive financial world. It's an invitation to participate in shaping that future.
That's a powerful message to end on. Thank you for guiding us through this fascinating exploration of decentralized finance.
It's been a pleasure.
And to our listener, thank you for joining us on this deep dive. We hope it sparked your curiosity and inspired you to learn more about this transformative technology. Until next time, keep exploring.